All right, today we're going to talk about something that's a lot more than just numbers on a spreadsheet or dry policy talk. We're diving into the real human story behind a financial crisis that, honestly, it shook an entire nation right to its core. Seriously, just take a second and imagine this. You wake up one morning and the money you've saved up for your kids' school, for your parents' medical bills, for your future, it's just locked away. You can't get to it. No warning call, not even a text. It's just gone. And you know what? This wasn't some bad dream. This was the cold, hard reality for millions of people in Ghana between 2017 and 2018. To really get what went down, we have to start with the people who were right in the middle of it all. Yeah, to wrap our heads around just how big this was, we've got to zoom in and see how it hit individuals. It really all begins with a single person's dream, a dream that suddenly found itself locked behind a bank's closed doors. So let me introduce you to someone. This is Maame Esi. She's a market woman, sold tomatoes, and for 15 long years, every single week she saved, put away her money bit by bit. And she wasn't saving for anything fancy, no new car or big vacation. She was saving for one thing, her daughter's university education. After all that time, her life savings added up to 80,000 Ghana cedis. I mean, that was everything. Her life's work in that account. And when she went to the bank to take out just a little bit for her daughter's admission fees, the manager, reportedly with tears in his own eyes, had to tell her the bank was gone. It had collapsed. Her money vanished. And here's the part that's just absolutely devastating. Maame Esi's story wasn't unique, not even close. She was just one of 4.6 million people. Think about that number. 4.6 million depositors, all with their own dreams, their own plans, who were suddenly locked out of their own money. It happened almost overnight. But it didn't stop there. This wasn't just about personal savings accounts. Oh no. The fallout created this catastrophic domino effect that completely paralyzed small businesses and, of course, all the people who relied on them.
Okay, so take another example. A guy named Kofi. He had a spare parts shop, a small business owner, and he kept his working capital, the money he needed to run the business day to day, in a savings and loans company. Well, when that place went under, his money was frozen solid. Suddenly, he couldn't pay his suppliers. And the worst part? He had to let go of all 12 of his employees.
And that is how this whole terrible chain reaction worked. It's so simple, it's brutal. Step 1, the banks collapse. Step 2, all that business capital, it's instantly frozen. Step 3, suppliers can't get paid, so the whole supply chain just grinds to a halt. And then, the final, most tragic domino falls. People lose their jobs. Just like that, 12 families lost their only source of income, all because of one frozen account. So you have these personal tragedies, these business failures, but all that chaos triggered something even more dangerous, something that can bring a whole economy to its knees, a complete and total breakdown of trust in the entire banking system. There's actually a term for this. Economists call it systemic contagion, and it's exactly what it sounds like. It's when fear itself becomes a disease. A few banks collapse, and suddenly everyone is asking the same question. Is my bank next? That kind of panic, man, it spreads like wildfire. You had people literally running to the banks to pull out their money, even from banks that were completely fine, totally healthy. I mean, you had grandmothers pulling cash out from under their mattresses because they trusted that more. All that trust, right? The trust that takes decades, even generations to build. It was gone, evaporated in what felt like a single afternoon. So we've seen the personal stories, right? But this was so much bigger than that. This crisis left a deep, deep wound on the entire national economy. It ended up affecting every single person in the country one way or another. So you might be thinking, okay, but how did it affect people who didn't even have a bank account? Well, it hit everyone in 3 big ways. First, a massive credit crunch. Second, a huge taxpayer-funded bailout. And third, a major slowdown in the whole country's economy. All right, so let's break that down. The credit crunch. What does that even mean? Basically, the banks that managed to survive got really, really scared, almost paranoid. They just slammed the brakes on lending money, especially to small businesses. And think about it. If businesses can't get loans, they can't grow, they can't expand, and they definitely can't hire new people and create jobs.
Okay, second thing, the bailout. The government had to step in with 8 billion cedis to stop the whole system from collapsing. And that's taxpayer money we're talking about. Now, here's what you've got to understand. what we call the opportunity cost. What else could that $8 billion have done? Well, it could have built 20 brand new hospitals or paved 500 new roads. But instead, all that money had to go to patching up the broken banks. So look, on paper, the financial system is more stable today. The cleanup did what it was supposed to do in that sense. But we can't forget that it left behind permanent scars on the lives of millions of real people. Let's go back to the people we started with. Yeah, the cleanup was probably necessary to root out bad practices. But the human cost, it was immense. Maame Esi's daughter, she never made it to university. And Kofi, the guy who owned that spare parts shop and employed 12 people, he's a taxi driver now. You see, these aren't just little bumps in the road for them. Their lives were changed forever. And this is where it gets really personal, right? Maybe you think, well, I wasn't directly affected, but think about it. What about that uncle who lost his pension? Or your neighbor whose little shop had to close? Or even that pothole in your street that never got fixed because the money wasn't there? The ripples of this crisis, they touched everyone. So, after all of this, what's the big lesson here? Look, the banking system in Ghana is stronger now, no doubt. But this whole story is such a powerful reminder of one simple, fundamental truth. A bank's license, that's just a piece of paper. A bank's building is just bricks and mortar. The real asset, the most valuable thing it will ever have, is the trust of the people.